Welcome to your next highlights. And what we're going to be doing today is go over some market outlooks and go over key support and resistance areas. And in also doing so, we'll do some education to show you some of the strategies that we use here at candlecharts.com. And just let with the extreme volatility in the market due to the election news, I'm doing this at about 12:30 Eastern Time. So let's look at the euro. And one of my favorite Western strategies, as many of you probably know, is change of polarity. So here we have a prior support area, and you can make it a zone. So support here, and over here. And once the market decisively closes under that, we can then use this old support as resistance. And notice how although we had a strong candlestick signal on the last full session in the euro, it stopped right at the resistance area. So a key point is the market really has to close above this resistance, in this case 111.50, to say that we've broken resistance. And the euro, the risk is now down to the lows here. Notice the doji and the high wave candle. And just to refresh your memory, a high wave candle is a long upper and lower shadow, and it shows us that the market is confused. The doji also, although doji work better at calling tops, when you have a downturn like this, the doji does turn the market a little less bearish, and especially when you have 3 sessions confirming a support area, the odds of a turn are greatly. And the change of polarity is a Western signal. Let me show you again, just to remind you how easy it is to combine candlesticks with Western indicators. I'm going to make a trend line here, and notice the support area, and you have a falling resistance line. Anybody know what this is called in Western technicals? Right, a descending triangle, which is confirmed on a break under, in this case, the lower end of the support area over here, under 111. And for those of you familiar with this Western signal, and this is why we so strongly emphasize in our education, not only our candlestick education, but Western signals to get price targets, notice that, and I'll draw an arrow here, what you could do is take the height of the triangle, okay, from here, so from right around 113 to around 111, so it's 200 pips, and you take that away from the bottom part of the support area, so 200 minus 111, again rounding it off, gives us a target to 109, and notice what you got near there, the doji and the high wave candle. And in fact, we could also make this, if we want it a little longer, we could also make this the descending triangle, see, over here and over here. And in that case, what we would do a little higher level, so we'd get, let's say, from 113.50 down to 111, what is it, 250 basis points, and look at that, 108.50. So I would have had, once the market broke the support under here, we then say, okay, old support should become resistance. And what that means, if the market closed under here as it did, if it gets back above 111.50, then you should be out of the short side. But until then, using Western technicals, we'd have a target anywhere between 109 and 108.50. Then you start using the candlestick signals to see, hey, as we get to the target, we're getting not quite bullish candlestick signals, but candlestick signals showing us the market is losing bearish momentum, and that would be a great time to lock in some profits on the short position. And knowing when to short and when to cover is great in future in Forex, because it's just as easy to go short as it is to go long in the Forex market. Okay, let's look at the S&P now. Okay, once again, I'm doing this about 12:30 Eastern Time, and the reason I want to discuss the S&P is the change of polarity. The markets obviously have not closed yet, but this is a plus. See this prior support area here? This is a classic piercing pattern. And one of the great things, and I'll get to this recent action in a minute, one of the great things you could do with candles is not only get potential reversal signals, but also get support areas. So yeah, we have a piercing pattern there, but think about it. If you buy here, and your risk is here, and your target is here, that's a poor risk reward. How about if you wait, it may not happen, but if you wait for retracement to the support area near the low of the piercing pattern. So that means I probably would not be buying it here because it's a long black real body, but on this session with the small real body, One could think about buying it because now your risk is still the same thing under the law of the piercing pattern, but you've tremendously improved risk reward because your risk is here, but look at your profit potential is over here. In fact, actually, I'm looking at this. We have a falling window. So at a minimum, this would be your target. So that means if you bought it here, this might be a longer term target that's major resistance, but really the first resistance area is the falling window. So obviously not a good buying opportunity on that piercing pattern. But over here, if you bought it here, your risk is here, and even if you get to the minimum target at the bottom of the falling window here, it's still a great risk reward. But let's get back to the change of polarity. So we saw on the euro the change of polarity worked out well so far, but here the market is moving above it. So any close in the S&P above, let's say 2120, would be what we call a crack and snap, where the market breaks support and snaps back above it, and that would give us a target to the highs over here, minimum target over here. And obviously the first support is the rising window. We don't know it's an official window until the end of the session. Okay, and this is an inverted hammer. Okay, this is one of those signals that you need bullish confirmation on by a higher close or at least a higher opening, which we obviously got. Okay, and this one's a little bit more advanced. It's not one of my favorite candlestick signals because it's a potential bottom reversal signal, but the long upper shadow is actually a negative feature. So we definitely need confirmation on an inverted hammer. But the change of polarity to me is so important. And if you remember from years ago, and I'll just bring this up again, how we use change of polarity, even from an investing perspective. So here is a monthly chart, and back in 2013, when the market broke out, I had a target anywhere from 22 to 2300, and I essentially got that based on this box range here, and took the height of the box range and added to the breakout, and we got very close to the 2200 area. Made a doji, pulling back a little bit, but what I wanted to point out here is, again, the change of polarity. See this prior resistance over here, the zone over here, and I'm going to zoom in over here. And notice what happened. The market closed above it. Look what became support. So for anybody who did like I did, just shifted more into equities on the breakout here from my retirement portfolio, what's great is there's always a price that says you're wrong. So if the market, in this case, closed on a monthly basis, and I'm fine doing weekly or monthly for my long-term retirement accounts, if the market closed under, I'd say 1500 to give it a little bit of a cushion, I said to myself, if I'm long and the market closed under 1500, I'm wrong. But this is one way that you could use change of polarity. It need not only be from a trading perspective or on a daily chart, but it also could be on a long-term monthly or even a weekly chart. Okay, so still from a longer term perspective, and I think we brought this out a couple of months ago, this is the key resistance area. I know we're quite a distance away from there, but right around the 2200 area, and this is one of those very rare patterns, an abandoned baby. Okay, you may have heard us talking about this before. It's not a perfect abandoned baby, but abandoned baby is when they gap up and gap down, and there actually is a rising window and a falling window here, and you have a doji. And this is very close to being a doji over here. So I call this an abandoned baby top. You may view this also as a shooting star, and the point is it confirmed a resistance area. So in my opinion, from a longer term perspective, to say that the Japanese would say that the dust has been blown away from the market, in other words, we're ready for another strong leg up. We have to close above 2200. Again, that's a long way from here. But from a shorter term perspective, as I mentioned, I'm going to draw this change of polarity again. Okay, any close above the 2120 area I'd view as a short-term positive with a minimum target here. Again, you can't do much from a risk-reward perspective, because with a crack and snap, the crack and snap is you break support and then snap back above it, your target is the most recent high, so not much you could do there from a trading perspective. But from a little longer term perspective, I would view it as a positive, because this should have been anybody, think about it, anybody who bought here and here and here, okay, losing money, and they'd be thrilled to break even. So this old support should become resistance. The fact that it's not so far is a positive. But, a lot of this is based on the election, so we'll see what happens on Tuesday. Thanks for joining me.